Hello, it is Tuesday, the 24th of June, 2008, and this is Brian Shannon speaking. The market's closed here. S&P 500 finished with a loss of 27 cents, but that closing number isn't as bad as it got, as we'll see in a moment here. We had a pretty volatile session ahead of the Federal Reserve meeting tomorrow. And, don't get caught up in the hype of the Federal Reserve meeting. There was, I was listening to television for a little bit there today, and they were saying, here's the most important Fed meeting of the year. That's what they've said the last 4 meetings as well. The point is there's a lot of volatility around the Fed meetings, and it becomes very volatile. You have to be very disciplined to trade it. Most people, I think, are better off not getting involved because it can really be an emotional period of time with such quick moves, and you're liable to make mistakes, or any mistake that you do make is going to get punished and exaggerated more severely than it might normally be. So just be very careful, and I think a good example of that is the rumor on Yahoo today. Yahoo had a rumor that Microsoft talks were back on, and all kinds of volatility in here. I think this is about where they had mentioned it on the television at about 22.5, and of course it ran up a little bit, then just caved in. But you see it held above that daily VWAP. So there is a way to play these things if you have the right tools and the right experience to recognize where and when those opportunities are. Back to the S&P 500, though, we saw a low of 130.19 today, which was basically down near that 130 level we were looking for as far as the measured move goes. Now in here we had a gap lower, and I said yesterday it seems as though the pressure is building, and it seems like it ought to continue lower, especially in the case in light of the fact that we have that declining 5-day moving average. It got down there, and then about this point I had posted on the blog that it looks like maybe the worst was behind for the day, but it didn't mean that it made sense to get long, especially in with the declining 5-day moving average. But if you were going to, that you have to be very quick and disciplined. And here we can see, this is where the sellers were in control all morning till about 10:45 or so, and then they took back control, and just a real nice pattern of higher highs and higher lows in here. Got briefly interrupted there, and then we saw the market kind of turning sideways, and then a sell-off towards the end of the day. And overall, the sellers were back in control here for the day, as the average price that the SPY traded at was about 131.39, and we closed about 26 cents below that. So the pattern of lower highs and lower lows seems to have been interrupted temporarily in here. In particular, if we can stay above this level and then maybe take out these highs, that'll give the opportunity for the 5-day moving average to flatten out. Realistically, again, I'm going to say that I think tomorrow's trading is better left to others. I'm going to probably look for something else to do other than trade tomorrow, but I do tend to be addicted and say I'm going to do something else and then sit there and watch the screen and look for some opportunity. If we get a rally of any magnitude, I expect that the 133.5 prior level of support should be enough to probably halt it in here. If it can get above that, though, then we've got about 135, and I really don't see the case of it getting above there. But trade with stops and be prepared for anything. So right now we have the potential that we're getting a higher low in here, but it closed right on that level, so can't call it that yet. We need a confirmation of this short-term movement above this area here at about 132.5, and then maybe we start to consolidate underneath these levels. The market has gotten sold off a little bit, so maybe we get a little bit of a bounce, but again, the market is in a downtrend. It's guilty till proven innocent. The longer-term time frame still looks terrible, and it's more likely, I think, that we see a test of these lows, and again, perhaps even lower than that. So just a good time to be very aggressive if you're involved. I don't know where that line is. It keeps showing up every day. But here we're looking at the USO again, and the uptrend obviously solidly intact. Nothing's really changed in here. We've got resistance up at about 113 recently, and support down at 106.5. Breaking either side of that range, then perhaps we're going to see a bigger movement. The oil service index, the OIH, is something a couple people have asked me about. We've got a similar uptrend in here. I don't know if we can really take this. We could take this low and look at it like that. Support down here at about 213 or so. Keep in mind this market, this group is pretty overbought, but it's in a great uptrend. There's no end in sight to the uptrend in here. We had a actually big point move, not really so much volume on Monday, and a little bit of a pullback in there. So if we look at the today, that is, if we look at the 120-minute time frame, you can see that it was kind of setting up either you want to call it an ascending triangle like that, or a cup and handle. But I think that as long as this market holds probably above 215, actually probably this low here at about 213 or so, then you can look for this group for further upside when conditions merit basically on a shorter term time frame. We got this sell off here late in the day, so it's going to have to get back above 220, 221 for the buyers really to gain back control. The Russell 2000 broke down today and did confirm what was looking like it was setting up, but now we officially have a downtrend on this daily time frame. We have this high and we have a lower high. We have this low, and now today we have a lower low. And the level we were looking at, 7160, to confirm that level, I'd said, it looked like it was likely because it wasn't a heavily contested area. Let's take a look at the 30-minute time frame actually. The 7160 level wasn't a heavily supported level. There wasn't a lot of trading activity that took place there, and it looked like it was a steady supply coming into this market. It's breaking below 7160, sets up a move basically for a measured move target down near $70 a share, and it doesn't seem as though that is really very unlikely at all, as it's now only about 62 cents away. This market was actually weaker. As you see, this one came up to this prior support level and tested it and found resistance there, whereas the S&P 500 came up to its this area and kind of held basically in that level right in here. So the Russell 2000 is clearly weaker, relatively here, and more vulnerable to a larger breakdown. And I think 70 becomes a very obvious target at this point. Don't forget also that we have this potential for a bigger move down towards $68 a share based on the height of this head and shoulders pattern that I had outlined on the 120-minute chart yesterday. You see where we just take the height of this pattern, subtract it from the breakdown point here, and it brings us down to about $67.5, $68 a share. So the IWM is looking like sellers are clearly back in control once again, and now you've got to keep your eyes open and make sure that you're not just holding stocks based on what you think they should do. Listen to the message of the market. And here, the IWM today, we had that recovery back above VWAP. It struggled with it a little bit late in the day, and the sellers clearly took control in here. And on a relative strength basis, this was much weaker. Yesterday I said it felt fragile, and sure enough, it cracked right on the open. And after that bounce, we saw the support become resistance, as it usually does, but not always, and then further downside. So it remains vulnerable. Be careful. Again, we've got the Federal Reserve tomorrow as well, so there's going to be a lot of headline risk in the market overall, and a lot of volatility. That volatility will come after we've made a pretty good move here the last week or so. So it's possible that maybe some people get excited about what the Fed says and covers their shorts, or maybe the Fed disappoints. Either scenario is likely. To try and guess and position yourself is just that, just guessing. I would say if you're going to position yourself in the direction of the trend, but be prepared for anything. My way of approaching it is probably just to be in cash and avoid the craziness of it. The NASDAQ 100, the Qs were down 24 cents, about 0.5% here today. Yesterday I said that basically we could consider it officially in a downtrend, even though it hadn't taken this low out. So today we saw a follow through there. We clearly have lower highs and lower lows in here. We've got a declining 10 and 20-day moving average. The 50-day moving average is flattened out. The 200 looks to be creeping back down again. So this market remains very vulnerable. I think that we've still got the potential for the move down towards this level here at just about 45.5 or so. And the important level that we've been watching here, the more important level that we've been watching, has been this level at about 46.75, 47 to 46.75. We're right at that level, so we've broken it. We've broken really on an intraday basis, and we're right here. So unless this market can quickly rally back up and recover, it appears as though it should continue lower, initially at least to about that 45.5 level that I pointed out yesterday, and take it one step at a time, but be suspicious of any rallies in here. We've still got lower highs and lower lows on this 10-minute time frame. Maybe we're going to make a higher low in here and then break this this downtrend over the last 3 or 4 days. But overall, you've got to be very suspicious of any strength, because we've seen a lot of what appears to be distribution over the last month or so, and it seems as though this market still wants to go lower.